Hello, everybody. Welcome back to another episode of The Lunch Hour, brought to you by Constant Collab, where we eat, sleep, and breathe finance, news, and everything in between. So if you like finance, news, and crypto, make sure to subscribe. There is a lot going on in the crypto market today, so like always, let's dive in. So right now, the cryptocurrency market is looking a little shaky overall. Let me make this screen a little bigger, guys. But right now, the cryptocurrency market is sitting at $2.536 trillion. The volume is currently, the 24-hour volume is currently at 120 billion. Bitcoin dominance remains at 41%, and Ethereum is sitting at 20.4%. So right now, the overall market is down 2.5%. We have lost close to 70 billion in the overall market cap of cryptocurrencies. With that being said, like I said, we are down 2.5%. Bitcoin is getting hit hard today. We are below 55. We are sitting at 54.9, down 3% for the 24-hour period. Pretty much flat for the week. Ethereum is sitting at 4,323, down almost 4% for the day. It's still up almost 6% for the 7-day period, however. Let's see what else is going on. Yeah, a lot of red. So if you're not a stable coin right now in the top 10, you are red. Except for Terra Luna. Terra Luna is sitting at the 11th spot, $68.18, up almost 6%, 62% for the 7-day period. That is the only one. Terra and Matic are the only ones up in the top 15. Outside of stable coins, of course. But yeah, pretty much everything is red right now, unfortunately. There's just a lot of uncertainty in the market when it comes to the new Omicron variant, inflation, whether the Fed is going to tighten or ease their policies in the next couple months. There's just a lot of uncertainty in the entire market. The government is battling against the debt ceiling. We are going to talk about that towards the end of the show. But yeah, let me pull this up. This is the Fear and Greed Index, the Bitcoin Fear and Greed Index. And right now it's sitting at 31. So we're definitely in fear. Last month, we were in extreme greed. And then last week, we were neutral, right around the 50 mark. But now we're in fear. Yesterday and today, we've been in fear, and we're probably going to go lower. The next update is in 6.5 hours. So I think that we're probably going to hit the 25 to low 20s probably, and put us in extreme fear, just the way that the market's looking. If you look right below me, I mean, everything from BTR, the BitTrue token, down 6%, Bitcoin red, Ethereum red, XRP red, Litecoin, 1inch, Aave, Cardano, everything's red, unfortunately. But we just have to be patient, and December is usually, especially during the bull cycle, is usually good for crypto. So we just have to be patient and see what happens. And then right here, if you pull up the CBII, so the CBII is at 58. This pretty much has called every single top on Bitcoin, or the crypto bull run. And right now we're at 58. So, I'm sticking with it until it is wrong. And like I said, he has called every single top for crypto bull run. So I'm you just gotta be patient and wait. Patience, I said it yesterday, patience is the name of the game. And we just have to wait. Don't make panic moves. That's when you get hurt, when you try to sell and you think that the market is gonna go lower. Just be patient. Nobody knows where the market is going. And at the end of the day, I agree with the CBII. I think we're going to go higher. But let's dive into the news. And excuse me. Billionaire investor Charlie Munger calls crypto crazy, wishes it had never been invented. You know, the article mentions it, but Charlie Munger is partnered with Warren Buffett. Warren Buffett also hates crypto. So at the end of the day, Charlie Munger is 97 years old. He does not understand cryptocurrencies. The same thing with the internet. When the internet was launched, I bet that he wished that the internet had not been invented. During the dot-com bubble, none of them, Warren Buffett or Charlie Munger, both of them stayed away from, tech companies and internet companies. They did not invest in Google or Amazon at their inception because they did not understand the technology. And now he's wishing that Bitcoin and blockchain had not been invented. I mean, at the end of the day, only time will tell. And, 10, 20 years from today, I think that we're all going to be glad that that technology exists. And the things that are branching out from the tech, from the metaverse to NFTs, I mean, that could not exist if Bitcoin was not invented and blockchain technology was not invented. So I don't agree with what he has to say. Don't get me wrong. I respect the man, and I think that he's smart when he sticks to his realm of knowledge, but he doesn't understand the technology. So of course he's going to say that he wishes that it wasn't invented. But let's dive into the article. American billionaire investor and vice chair of Warren Buffett's Berkshire Hathaway, Charlie Munger, has once again lashed at the crypto community. Munger is known for his anti-crypto sentiment, and he never hesitates to let his stance known. A few years ago, the billionaire announced his disdain for Bitcoin, referring to it as a turd and a non-productive asset. Today, at the Sun Hearts and Mind conference, Munger said that the current investment environment was more extreme than anything he had ever experienced. He went to call cryptocurrencies crazy, saying he wished they had never been invented. Let's see. Crypto market crazier than the dot-com era. The 97-year-old investor simply cannot understand the rally in crypto market. I think the dot-com boom was crazier in terms of valuations than even what we have now. But overall, I consider this era even crazier than the dot-com bubble. Tell me if that makes any logical sense. So internet companies in the dot-com era, pets.com, had no working product. They were completely useless. They were literally a website. And the valuations were higher during that era. And then he says that cryptocurrencies are crazier. I mean, there are companies here in blockchain and crypto that are making money with their products. So logically, that makes no sense to me. Expressing his extreme criticism towards cryptocurrencies, Munger said, "I'm never going to buy a cryptocurrency. I wish it had never been invented." He further blamed the craziness on American millennials. I don't know what they're doing in Australia, but they're very peculiar. But here they're very peculiar, very self-centered and very leftist. Again, I don't understand what people's political views have to do with cryptocurrency investing. And at the end of the day, if you look at Congress, the people, the politicians supporting cryptocurrencies right now are Republicans, more conservatives that see innovation and technology as a good thing for economic growth. So again, who is anybody questioning this guy when he speaks? Again, I have mad respect for Munger, but when it comes to technology and crypto, I stay away from what he has to say. At the same time, in a popular opinion, Munger praised China for its nationwide crypto ban, saying they acted in a more adult fashion, unlike other countries. He also condemned the U.S. government for not taking similar action. Yeah, so he wants the U.S. to take totalitarian stance when it comes to cryptocurrencies, and not let U.S. citizen invest in an asset class that could allow for economic growth and for their financial independence. So China did this because they want to control their people more with their CBDC. They're launching their own CBDC, and at the end of the day, they're going to be able to see what transactions people are doing. And for Munger to say something like this, like, I don't know. I don't know. Again, he's a smart guy when he's stays in his lane, but he should not speak about that he doesn't know. That's all I have to say on that. It's a little rant, but yeah, come on, guy. Goldman Sachs and other Wall Street banks exploring Bitcoin-backed loans, and then you have people like, again, banks, smart money getting into cryptocurrencies and Bitcoin. Several top United States banks, including Goldman Sachs, are reportedly exploring using Bitcoin as collateral for offering loans to institutions. Under the plan that participating banks will not engage in cryptocurrency spot markets, but will mainly focus on products such as futures and other synthetic crypto offerings. We've probably spoken to half a dozen banks about Bitcoin-backed loans. Some of them are in the next 3 to 6 months category, and some are further out. What's interesting is some of these banks will use their own balance sheets to make the loans. Other will syndicate this out. So apparently, to this report, banks in the next 3 to 6 months are going to start doing loans backed by Bitcoin. Goldman Sachs aims to join the other lending institutions like Silvergate and Signature, which have already announced their plans to offer Bitcoin-backed cash loans. Coinbase might offer custody services. On provision of custody services, crypto exchange Coinbase and Fidelity Digital Assets have emerged as possible entities to back the plan on providing custody services. Additionally, the sources note that realizing Bitcoin collateral products will lay the ground for more integrated digital asset prime brokerage services in the future. Furthermore, lower tier banks are also reportedly contemplating following suit to use Bitcoin as collateral. And yeah, I think I've been saying it since 2016, 2017. Whenever I talk to people, this is the future. Banks will hold cryptocurrency. Banks will not just die. They're going to hold it. At the end of the day, having control of your own personal key and having the risk of losing your cryptocurrencies if you lose the key, people don't want to take that risk, and they feel more comfortable with a third party, such as a bank, to hold their assets. And honestly, me too. An insured institution that I just have to log into my phone and see my assets, whether they're moving up or down. I just have to log in. That's the way that I like to roll. Yes, I keep some of my assets on a ledger just because, of a security aspect of it. But I like the fact that banks are able to do that, and I don't run the risk of losing my private key. On other news, we want to be the AWS of crypto, says Coinbase exec. With Amazon Web Services being one of the most popular cloud services providers on the planet, it's no surprise that Coinbase, a cryptocurrency exchange based in the US, is attempting to capitalize on its success by developing its own cloud infrastructure solution, Coinbase Cloud. We want to be the AWS of crypto, said Coinbase Chief Product Officer Jarushi Chatterjee. I probably butchered that name. In an exclusive interview with Forbes, we are building this whole Coinbase Cloud suite of products that you can think of it as a crypto computing services to help developers build their applications faster. Before becoming Coinbase Cloud, the service was named Bison Trails, a cloud-based staking infrastructure solution that Coinbase bought earlier this year for an undisclosed amount that was rumored to be above $80 million. According to Coinbase, Bison Trail is a non-custodial platform, which means it does not manage client staked assets. Amazon Web Services was once a secondary consideration for Amazon in Seattle, overshadowed by Amazon. Nevertheless, the Amazon subsidiary that debuted almost 20 years ago is now the firm's major profit engine. AWS earned $13.5 billion in annual operating earnings in 2020 on a revenue base of 45.3 billion, or 63% of its parent company total. So today, AWS is pretty much the main engine of revenue for Amazon, and Coinbase is obviously trying to do the same. It's just Coinbase is a publicly traded company, so they're obviously, to survive, they need to find another source of revenue. And the article continues to say that right now, the main source of revenue for Coinbase is the fees that they charge for trade on their exchanges. And obviously, they're trying to find a different source of revenue, so they can mitigate a risk of losing profits when the market is down. So yeah, let's move on. US-based crypto firms WisdomTree lists crypto ETP on Euronext. So a lot of since the SEC is having a hard time, or they really don't want to approve an ETF in the US, a lot of US companies are starting to launch those ETFs. They're known as ETP in Europe, in the European market. This one is was launched by LendingTree. LendingTree was denied an ETF in the US a couple days ago by the SEC. So they're obviously moving to Europe, where it's easier and regulators are more friendly to allowing these types of products. It's sad to see that happen. I mean, at the end of the day, the SEC is taking it upon themselves to limit the gains that U.S. investors are able to make in the crypto market by regulating everything out of their what. But hopefully, eventually, we will able to get an ETF, a spot price ETF in the U.S. So we'll see. Only time will tell. Moving on, Defiance launched an ETF to track NFTs and blockchain firms. The metaverse has been a hot topic in 2021. It's obvious that investment companies have plans to offer investors access to growth in the virtual world. In a press release issued earlier this month, fintech asset manager Defiance Investment announced the launch of an ETF-focused exchange-traded fund, Ensure the NFTZ Fund. Defiance's first ETF, Meta ETF. While the majority of interest is on the release of NFTs collectibles, many teams are now focusing on expanding the use case of digital assets, as well as building something stronger, something that can support the NFT ecosystem as a whole. Defiant Investment is on that mission. The NFTZ aims to give investors and traders the ability to gain exposure within the potential world of NFTs, including the NFT marketplaces and their underlying technology. In addition, investors grant access to a broad range of securities. And I think that's awesome. At the end of the day, it's very difficult to, assess the value of an NFT, or whether it's going to go up or it's going to go down. It's very hard. If you're not an art expert or an NFT expert or anything like that, it is very hard to jump into the craze. So to have an ETF that is pulled by NFT marketplaces and NFTs themselves, I think that's great. It simplifies it for investors and people that just don't understand art in the market. At the end of the day, I do own a couple NFTs, and I bought them because I liked the picture or whatever it was. But it's very hard to determine the next Bored Ape club and the next CryptoPunk or whatever it's called. But yeah, it's very hard to find those next big trends, and to have something that pulls all of that together, I think that's great, at least for investors. Let's see. On other news, did Celsius Network lose 51 million in a BadgerDAO hack? So there was a hack on the DeFi protocol. The DeFi protocol BadgerDAO, which specializes in offering yield opportunities on wrapped Bitcoin, suffered a major hack Thursday after a hacker exploited the app's front-end website. While the investigation is still ongoing, the attacker is thought to have added a script to the front end that tricked users into allowing the attacker to drain assets from their wallets. Over 120 million was drained. The biggest transaction saw the attacker drain 896.8 rat Bitcoin worth just over 51 million from an address commencing in 0x534. On-chain data suggests that the victim could be closely linked to Celsius Network, a CeFi app allowing users to earn interest on their cryptocurrencies. The rest of the article just go into the other wallets that were affected. And I mean, yeah, this sucks. I really hate to read stories like this. But it's been investigated, and more than likely they're going to at least find the individual or the group that was able to do this and blacklist their addresses. They're already like looking at the address where the wrapped Bitcoin was sent. But yeah, hopefully they're able to blacklist those addresses and they're not able to sell it. But moving on, Solajump, the first play to win NFT game on Solana, sets to out-revive short gaming. Solajump, the world's first play-to-win short game based on Solana blockchain, is thrilled to bring back the fun of classic short games. Developed by Kokeshi Academy Nerd 148 Studios, it uses NFTs to revolutionize the world of short gaming with its play-to-win model. Short games are fun, easy to play, and easy to get into. However, game designers who came up with Pong, Tetris, Arkanoid, Pac-Man, and other major hits had to make do with the limited power of computers in the past. Computing power is no longer an issue for players, unlocking the doors to a richer and more engaging experience. The initial minting of 10,000 algorithmically generated Solajumper NFTs will take place starting from December. I think I actually went to their website, and it starts in 9 days on the 12th. So the game, they have a tournament going. So let me see. Only the NFT entitles players to many perks and bonuses, such as 10 chances to reach first place in the Genesis tournament. At the end, players with the best scores will win 5 figures reward, with the ultimate winner bagging more than $30,000. After the Genesis tournament, players can choose to trade their NFTs on the secondary market or keep it to participate in monthly tournaments. So the very first one is kind of like Doodle Jump. I think that's the name of the game. And you're supposed to climb as high as possible. And right now the pool has 2,000 Sol. The first place winner gets 150, second 100, and then the third place 50. Those are the big pots. But jump to the Genesis tournament. So yeah, and I guess they're going to do monthly games, like if you own an NFT and you can participate in the tournament. But all in all, I mean the NFTs look pretty cool. The Solajump. But yeah, this is cool. 10,000 of them will only be minted, which is kind of cool. Makes them a little rare. But you'll be able to sell them in the secondary market if you want. So something to keep in mind if you like to play games like that and participate in tournaments. Saxo Banks believe NFTs can disrupt Spotify and Apple Music. There have been many reports questioning if Spotify pays musicians fairly. While the popular music streaming service is yet to disclose exactly how much it pays, industry experts have suggested that its payout rate for recordings at nearly 4,000 per million streams, or less than half a cent per stream. However, NFTs are here to rescue, at least according to Saxo Bank. So I honestly think that will be the future. I don't want to dive too deep into the article, but at the end of the day, I do agree. A lot of artists, they're underpaid when it comes to streaming platforms, and unfortunately, Apple Music, Tidal, and Spotify, they're, I want to say, the big three, with Tidal being way below Apple Music and Spotify. But artists, those are the only places that they have to go. So if they're able to directly have music sent to their listeners and their fans, and they can remove the third party, I think they're definitely gonna jump on that. I mean, the more money they can make, the better. So I agree with this. And there's a lot of applications that NFTs, or a lot of problems that NFTs can solve when removing third parties and intermediaries. So that's just a start, in my opinion, when it comes to NFTs. And then SHIB community burned about 2 billion SHIB in November. So according to SHIB burn, the SHIB community, dubbed the SHIB army, burned about 2 billion SHIB in November, a total of 410 trillion, 298 billion, 489 million, 440,804 of the 1 quadrillion initial supply has been burned. Tokens that are burned are permanently removed from circulation. The decrease in circulating supply is predicted to raise the price of Shiba Inu in this instance. According to Shiba Inu's burn tracker, she burned a total of, I just said that number, SHIB tokens, or 41% have been burned from the initial supply of 1 quadrillion at the beginning of November. As of November 1st, this number has grown to 41%, representing a nearly 1.9 billion increase in token burn within the time frame. Shiba Inu is about to undergo significant alterations that are likely to increase its value and boost its price. Shitoshi Kusama, the SHIB team's lead developer, recently discussed the potentials of Shiba Inu's gameplay expanding into the metaverse. So yeah, there's a lot of people that say that, you know, Shiba Inu cannot reach 1 cent, but if the burning rates continues, I think it could. I think it could. I mean, again, time will tell. If you hold it, you know, if you buy before the big run, you probably make some money. But yeah, as more utility is added to the network, to the Shiba network, the more tokens are burned. And if that continues, again, as 1 cent is possible. I mean, a lot of people said that Doge could not reach $1, and it was right at the doors. So next bull cycle, it could, easily could. But moving on, in stock market news, Kramer says stocks are still badly oversold even after Wall Street big rally. I don't know if I agree with that. I feel like the stock market has been overbought for the last year and a half. But, you know, at the end of the day, the Fed keeps printing money, and that money has to go somewhere. I've said that multiple times. CNBC's Gene Kramer said Thursday that trying to get into the mindset of the stock market can be hard to fathom, especially with Wall Street recent volatility on the developments of surrounding the new Omicron COVID variant. Sentiment is a fickle beast, he added. The Dow Jones Industrial Average soared 616 points, or 1.8%, despite 2 more Omicron cases being reported in the U.S. on Thursday, while the market was open. 5 more cases were reported after the market closed. Dow futures in after-hours trading turned negative. The first U.S. case reported the day before swung the Dow from 520 points gain to 460 points loss. Investors now seem to accept the Omicron variant as just a new fact of life. Of course, if this strain turns out to be worse than Delta, and we start seeing a huge wave of hospitalizations, then we'll look back on today's bullishness as a temporary condition of insanity. So there's a lot of volatility, a lot of uncertainty. I said that at the beginning of the show, and we just don't know. I recommend being patient and not taking any hasty decision, not making any hasty decisions, and just wait. Same thing is happening in the crypto market. The crypto market, it's a lot of uncertainty going around, and we just have to be patient. I'm still bullish. I'm still trying to be as patient as I can, and I don't think we've hit the top. I just don't see 69 as being the top of the crypto market. But on other news, as if Omicron weren't enough, Congress fighting over the debt ceiling spending again. So again, we've talked about this. We talked about this in October, when we were about to hit the debt ceiling. You know, at the end of the day, they came up with a deal to kick the can down the road to December. According to the Treasury Secretary Janet Yellen, we have till the 15th before the U.S. defaults on its debt. I don't think that we're gonna hit that. I don't think, you know, the Republicans are saying that at the end of the day, the Democrats, they have a majority in both houses of Congress. They have the ability to increase the debt ceiling through reconciliation. So we just have to wait and see. I don't think that they're going to let the U.S. default on its debt. We're currently at 28.6 trillion in debt. But it would be, in my opinion, it would be irresponsible to let that happen. I mean, if it happens, great. If it doesn't, that's great too. At the end of the day, most of my money is in crypto, and I honestly think that the crypto market would benefit if something like that were to happen. The U.S. defaults on its debt, or it gets downgraded. You know, that could be a huge catalyst for crypto, because it would definitely slap the US dollar in the face. So we'll just see. I don't think it's going to happen. I don't think the Republicans or the Democrats will let it happen. I think the Democrats will pass it through reconciliation if they have to do it, just to not let a default happen. That definitely would not look good if the US defaults on its debt while being under the control of Democrats. I don't think that they will ever let that happen. But there's an article that I found this article at the last minute, and I wanted to cover it. IMF warns on inflation, says the Fed and others should be prepared to tighten policy. I just want to make this article a little bigger so you guys can see it. Central banks such as the Federal Reserve should be prepared to tighten policy in case inflation gets out of control, the International Monetary Fund warned on a Tuesday report. While the IMF said it largely concurs with assessment from the Fed and many economists that the current global spate of price increase eventually will ease, it noted there is high uncertainty around those forecasts. The cautionary tone mentioned the US as well as the UK and other developed economies as places where inflation risks are skewed to the upside. While monetary policy can generally look through transitory increases in inflation, central banks should be prepared to act quickly if the risk of rising inflation expectations become more material in this uncharted recovery. Gita Kopinov, the IMF economic counselor and director of research, said in an executive summary accompanying the report, central banks should chart contingent actions, announce clear triggers, and act in line with that communication, she added. So, yeah, I mean, at the end of the day, central banks, they try to do as much as they can to control the economy, but, you know, markets are emotional creatures. Where anything where human beings are involved, it becomes an emotional thing. And the entire market is, like I said, it's an emotional creature. And to determine where things are going to go is very hard. It's very hard. Isaac Newton back in during the Tulip Mania said, you know, that he can, you know, sharp planetary movements and whatnot, but understanding the stock market is it's almost impossible. And Albert Einstein said the same thing. So it's very difficult for anybody, even economists, people that are experts in what should I call it, the stock market and world economy. It's very hard even for them to determine where things are going, and the Fed cannot know whether inflation will skyrocket overnight or not. So they're according to the IMF, they should have some contingency plans, and yeah, we shall see. But anyways, that is all we have for today, guys. Thank you for tuning in. We appreciate all the viewers, all the subscribers. Remember, we are giving away an NFT. Only 1,000 were minted for that NFT, and yeah, all you have to do is subscribe. At 500 subscribers, we'll be announcing a winner. So subscribe, share, like this video. We appreciate all the viewers, all the people supporting the channel. Thank you. But catch you guys on the next one.